Hey everybody, welcome back to the channel. Welcome back to the Matrix. August 28th, 2025, SPX trade review. I am not a financial advisor and this is not financial advice, so please do your own research. With that said, let's jump right into SPX trade review. We have a 4-hour chart of the US 500. I want to recap from the last video, talk about what we were thinking, what has transpired since then. This 4-hour fair value gap was significant price action. Talked about that in the last video. Talked about a potential retrace to 50% of this level here. We did indeed retrace 50% of that level. Another thing that I like to do after we establish swing high, swing low, I like to take my Fibonacci retracement tool and I will snap from swing high to swing low. So right here you can see my thinking was that we would retrace 50% of this. When I snap this from here to here, you can see we actually retraced 50% Fibonacci of this entire move. So that was a great spot to bounce. Buyers came in, bought the dip, and drove price right back up to test very close to previous all-time highs. Let's just look real quick at how I formulated today's day trade plan. We're going to zoom into a 15-minute chart. And this indicator that I have here is ICT Kill Zone by Lux Algo. I use lots of their tools, and you'll see lots of their stuff in my video. I am not sponsored or affiliated in any way, but I might as well give them a free plug. So if we go back to Tuesdays, we got Tuesday the 26th here, okay? And you can see here we consolidated. So we pushed up out of that 4-hour fair value gap, pushed higher, and we closed near highs on the day on Tuesday. And the way that I formulated my plan for Tuesday was Asian swing high for Wednesday, rather. Asian swing high, London low, and play the opening range accordingly. So we got a nice push higher again, and into the close we had NVIDIA earnings on deck, and they posted solid results. Of course, we had some volatility. NVIDIA dipped, the market dipped with it, but there was a pretty quick recovery. So fast forward to today, and how did I come up with today's plan? So I took the Asian high into consideration. I took the London high into consideration. Just to keep it simple, I said the range is pretty big, but 64.92 is going to be my breakout. So I'm not going to get too excited for follow through until we get a breakout of 64.92. And also a break below 64.55, which was support yesterday that we bounced off of. So a pretty big range, but nonetheless one that is actionable. So take your rectangle tool here. You've got pretty clear levels to play off of if we break above or if we break below. So my plan was a rejection off of 64.92. We can play it short down to 50% of this range here. And obviously, if you lose support here, 64.69, we can play it down into the 64.60, and then critical support is 64.55. That was my plan heading in today. Posted that in the Discord. I believe I posted it on X. But long story short, here's your New York Open. Rejection off of 64.92 area, nice wick down, and we were able to catch the move down. There was a gap down to 64.80 because we closed the previous session at 64.81. So Thursday, always a high probability of filling that gap. So as we push down, rejected off of our key level resistance, there was a good chance we were going to get a flush down to 64, at least 64, 64.80, and then below that, obviously, we had the Asian low as a potential target. So let's zoom in a little bit more, and we could talk about how we played it, how I played it, how some of the members in the Discord played it, keeping it real simple. So we've got our box here. I like to use this Luxalgo opening range break toolkit. It's just a simple mark out of the 30-minute opening range. And the theory behind this that I like to kind of focus on, especially for anyone that's potentially trying to find some consistency, trying to find something repeatable, trying to find something timed. This works really well. So rejection off of 64.92. Now, you could simply short the market, short the open at the market. John Carter's gap fill. There's a lesson I have on this, teaching his method, and my take on it is simply like this. So, especially on Thursday, I'll take the 5-minute opening range candle, and a break below that will play to the gap fill. If it's below or a break above, we can try to catch it to the upside. Now, the theory behind the 30-minute opening range is the same thing. You have to wait till 10 a.m., obviously, for it to set up, and then wait for some significant price action to kind of pave the way. But big range here. So certainly you can play level to level inside the range, opening range low to the 50% mark, or if you cross above the 50% mark, you can play to the top of the range. But I'm usually not getting super excited about follow through unless I'm breaking above or below the opening range. Now, lunchtime, usually chop. I try to stay away from lunchtime. But we did start to push higher around 12:30. So this was the first signal that we're attempting to break out of this liquidity here. This is a 5-minute chart. And if you look here, this was change of character. So made a lower high here from the open, came down here, higher low, and then price pushes up, closes above here. So change of character starts to occur. And the other tell is this beautiful 5-minute fair value gap. So this is a signal to me that there's a few things you can actually take from it. Number one, we change of character, significant price action, fair value gap, prints. Two, we are pushing back up into test the opening 30-minute, the opening 5-minute. And number three, we're starting to respect trend. So there's no trend here. This is choppy. You can see this orange line is that 20 session moving average. And it's just a simple kind of pivot point that you can use to say, hey, am I trending? Am I not trending? Am I chopping? But basically, we come up, we are respecting it. We push higher into the opening range. We come down here and we are respecting this fair value gap. We're respecting this 20 session moving average. So as we start to push up here, we're gaining confidence that we're going to push up and test new highs, new all-time highs. Another tool that I like to use, that I developed, that I will have a separate video on, is this Lux. I'm sorry, this is not Lux Algo. Let me turn off this Lux Algo. Excuse me. This is my indicator that I created, and this is the red pill VWAP with divergence signals. This is something that I created. The blue line down here, and will give a signal when there's significant divergence between VWAP and RSI. So on a 3-minute time frame, so I'm big on multi time frame analysis. It's important. You can see down here there were some other things happening under the hood. Bullish order flow, bullish order block left here. We come test, VWAP, and we push up 3-minute fair value gap, start to get some trend here. Another 3-minute fair value gap, pushing up higher, coming down here. This indicator was created in an effort to try to recognize the moments in time where pullbacks were more favorable. You don't really, sometimes you have a pullback coming back to EMAs or coming back to a certain level, and you always ask yourself the question, is this going to be a pullback or a reversal? I created this indicator, I back tested it for quite some time, months and months and months, and I had very good luck with it. So I released it. It's on TradingView, and I have a lot of confidence in it. It is not a standalone indicator. It is a use with, when in trend. You can see here later in the day it worked fantastic. This was an elite entry on a pullback here and push up higher. So we pushed up and started making new all-time highs. I mean, we made a new all-time high right out of the gate, and then we pushed up, new all-time high, new all-time high. All-time highs are like magnets. Trying to find a top on them, trying to call a top on them, I found pretty tricky, pretty dangerous. Lots of short covering over and over and over. And I would prefer to go with, and until the trend is broken, until there's a good reason to fade the move, I will try to go with. So we pushed up, we tapped 6,500. Remarkable move. And this is where we're at now. So Nvidia has recovered most of its move from the dip, down 0.79% today, and we are consolidating it. You can see there's this 3-minute bearish order block, but that's for another day. So hope you enjoyed the video. Just want to recap today's action and kind of what's transpired since the last time. Thanks for tuning in. I really appreciate it, and I'll see you guys in the next one.